Ranges are fun to trade in. All right, so on the 2 minute, I see this right at the medium threshold of the order block. And so depending on how it trades, we got swing low here, strong high, strong low, low resistance lows. And let's see how it trades here to possibly trade into this low resistance lows. But no, I'm looking, yeah, I will look for a buy here because this is on a higher time frame. All right, so see what it does on the 2 minute. We keep the lows intact, 456. And we got these lows, 458. The timing sucks. Swing high. We have all this happening. We have trend line happening. We got a gap right here. So this could have been this could be even a range too. But this is at 5 o'clock up until 5:10. Let's see what it does. We run out of high. 2 white candles, 2 bullish candles. Gap up high. 507. 509. We got a gap right here, 510. We kept these lows intact. These wicks, low resistance lows. Strong push. High resistance range right here. Ideally a swing low, swing high, then a swing low or lower low. You run out the lows into this fair value gap, into this high, support and resistance traders are in. I honestly think I might like NASDAQ more than I initially thought. We got the bull traders are in right here. Gap. Bodies are respecting this fair value gap. Swing low. Okay, cool. Now I want to see lower low, high, high, just to get the buyers in. And then the first sellers right here. There are sellers here and then sellers here. 521, this is into this gap. And we're hitting a trend line. So now we got trend line traders in that are watching this. Give them a little bit of food and see when they want to run them out. This strong move away in a gap. It'll be better if it does it around 7 o'clock and not this time. Go to the constant encroachment this way. Yep, bodies respect that. Trade higher. We got low resistance lows now. Balanced price range here. Map up the premium and discount of this range. Around this balanced price range around here. And so let's see what price does there. Now we got equal lows. Okay, I'll buy. I would trade at the constant encroachment. Ideally, price doesn't have to run out this high. 1, 2 highs already ran out the buyers for a 1-to-1 right there. And if I could go on a smaller time frame, I can just, if it's going in my direction, take small trades into this direction. But let's see how this runs. I think 534. Right, maybe why it may not work out. Bodies on this fair value gap. From a bodies perspective, we went out. This is another thing that I've been observing is low resistance liquidity when it comes to bodies. Look at that. That's double top for the people who just look at line charts. So definitely add more positions when this runs lower. Now this is definitely, we'll say this one, and this is long term. Move my stop loss here. There's a gap right here, but there's no other reason for me to believe that it needs to come back up one more time. I already ran out sellers here. We filled in this gap. We work this area multiple times and we trade lower. All white candles, bull, and then, so this was even a fake out range. All bearish candles. So we'll look at premium and discount from here to here. Ideally, we can see it coming up into this range. It's lacking buy side here and buy side and sell side here and buy side here. So inefficiencies, looking at the inefficiencies in the market. So that's what we'd be looking for. Let's see how market trades there. Buy side. This is an order block, so we don't want to see too much trouble here. Price respecting the gap. And then we trade with speed. Perfect. With this speed, definitely making me feel like it's going for these. And so that's a 4 to 7 break even. Just let it ride. Also respected the constant encroachment of this wick. Beautiful. Line chart. We do have low resistance liquidity highs right here. We may want to do that around another time. We got a gap right here. We'll see what price does with this on its way down. Bodies respect this gap. We don't want to see too much trouble here. 50%. We'll let's just see what it does at 50%. I don't like the lane with it below. All white candles and then strong bearish. 545, 546, 547. So we do respect the constant encroachment of this fair value gap. And the daily open. And we strongly close below here. This is a great dang. Honestly, I'm gonna start trading NASDAQ. And then we'll see what price does here. 547, 548, 549, 550, 551. So 551, 552, 354, 55, 56. We run out the highs. So people who want to participate in this sell, we are in a consolidation. We ran out the buyers here who were profitable, the bull flag traders. We got a large inefficiency right here. We could definitely see price wanting to come back into. So we run them out, body. So this is gonna probably create buyer side, sell side and buy side consolidate, and we'll see what it does. So we run out sellers. We haven't ran out the buyers yet. Low resistance lows. We get more buyers in. We got a fair value gap right here. Around a gap. With speed, this trades lower. Constant encroachment of this wick. We don't get to the constant encroachment of this wick. This is enticing sellers. Now we got this range to participate in. So we have a reason for it to go higher. There's an inefficiency right here. We got a gap. It's missing buy side. So there's a reason to go up here too and see. Let's see what it does. 5:59, 6 o'clock. We got low resistance highs right here. Closes below the constant encroachment. Body's respecting this high again, and it's the high of this fair value gap. We're really getting sellers in. This could be enough for a stop run on a line chart. We got a high, higher high, lower low. So this would be the market structure, the main one. We go to candles. This is the main high. We go to the candles. Ideally, run out these buyers. We do have a swing low right here, so it ran them out. And we have two consecutive bearish candles, so that could be a fake out. That's enough to be an emotional. Let me close my position, or an emotional. Let me get into a sell. Gap. Another swing high. Speed below the lows. Now would be anticipating on a smaller time frame, seeing when price wants to run up these, because this is a bear flag too. After a large range down like that, we're in like this type of bear flag. So these bear flag traders are right now, they're profitable. Price can go at least to, and let's see what it does here. But ideally, honestly, this is the discount. So just a little bit more. Let's see if price does this. So a little bit more into the discount and then trade higher. Let's do it. Ooh, trades. Now let's see if this creates a swing and a close above this order block. Ideally this. We're really getting sellers in. 1, 2, 3, 4 times we ran out the buyers. Look at, we pumped it, pumped it, pumped it, and then we pumped it one last time, and then we ran. And let's take this out. Let's see what it does. Displacement. Let's see if we can participate in this. Take out the gap. Try not to be greedy. I don't care. 1 to 1. Yep. And let's see if price wants to get up into this. On a smaller time frame, would have been, because I want to see a gap here, or should I have waited until it formed a gap? That is something I've noticed that makes where my trades work out more in my favor is when it does form a fair value gap. See? But did it hit the gap? If it didn't hit this gap, then I'm still feeling okay about that. We got an order block right here. Let's see. This is not the time to be trading anyways, but let's tap back into this low, all these lows. Premium of this fair value gap. Constant encroachment of this fair value gap. 609, 610. Whoa. Whoa. It really is just mindset. A lot of people don't understand ICT is because they don't have the mind of ICT, and the mind of ICT is a fucking cannibal. He has the mind. He's looking at this. He's not thinking about, oh, look how smart I am when it comes to the efficiencies and all the stuff that I make. He thinks of a mind. He has the mind of a predator. It's the most cunning. It's how can I devour the most? If my food is liquidity, where can I grab the most? There's this book I'm reading, Stormlight Archives, and these vicious entities take over this castle, if you say, say you will, and everybody is starving besides the rich people and then the people who took over that live in the castle. And while people are starving, one of the characters got invited inside the castle. It's a special place that she got invited into. She had to have somebody with her at all times. And when she went to the rooftop of this castle, they were feasting. And they weren't feasting in the way of sitting down and eating with napkins and a fine, let's TikTok word, demure way. It was of the spoils. They were enjoying the spoils. Food was everywhere, on the tables, on the floor, and they would just go around and grab handfuls and just stuff food in their mouth. Gluttony. The most. Take, take, take. And I feel like this has helped me more than this is a fair value. It's not like I was looking at patterns. I was looking at microstructures. I was even looking at the fair value gaps and the highs and the lows and got too really caught up into them. But it's more about what are they saying. All these markups is one, they need to move off of efficiencies. ICT was saying. So it's going to either draw to an inefficiency or it's going to draw to liquidity. And the more you can think about all the different types of prey that's in this environment, in this plane, in this safari, where they are all at. I'm going to rewatch this ICT video. Wow, it's the best one. It really is. Wow. And then how? And then wait until they go for that side that I know what side that they're going to go for. To me, I was trading that this would be no different than a breakout trader, right? To go for this high. It's at 329 high. We got low resistance liquidity right here, high. So there's a reason for price to go up there. But why not add more food before you kill again? So I'm going to go up here, work out the inefficiencies here. Now we got trend line traders here. And then we got people on the... People usually take 3 attempts to get into a market. There's a lot of ways of using this, right? So get them in the market. There's inefficiencies below here. So we can see that price can go back into a discount before it goes for these again. Runs these traders out. This is a protected low. Inefficiency right here. We're in a discount, so we can see price wanting to run these buyers out and then go. Or it might just go back down and run out London's low. But we wait until the next liquidity is ran. And let's do that right now. 611. We're gonna let this go fast.